There was a silent war going on, but instead of using bombs and guns and all that kind of scary stuff, the weapon of choice is something, well, pretty scary as well. Not as scary as all that stuff, but it's fiat currency. The US dollar's dominance is being challenged right now by China. The Chinese yuan is trying to become the world's currency of choice, but will it succeed? Well, let's find out and explore the different ways and how we can avoid being caught in the crossfire of all this fiat war. To understand this better, we have to go back in time, of course, and find out how the US dollar actually became the world reserve currency anyway. You see, back during the Second World War, the United States became the Allies' supplier of weapons and goods. This included bullets, tanks, medicines, fuel, and food. Part of the payment was received in gold, and when the war ended, the United States was swimming in precious metals, like Scrooge McDuck, right? Now, because of the war, countries had sold off most of their gold and other investments. By 1947, the United States had accumulated more than 70% of the global gold reserves. Who knew, of course, that war could make you so much damn, well, gold, make you rich. And of course, as they say, he who has the gold makes the rules. The US dollar's status as the world reserve currency was cemented after the war because of the Bretton Woods Agreement, wherein 44 different countries agreed to the creation of the International Monetary Fund and the International Bank for Reconstruction and Development, which is now known as the World Bank. The agreement also led to the creation of a new system of exchange rates. Each country basically would peg its currency's value to the US dollar, which in turn was backed by gold, with the US dollar convertible to gold at a fixed rate of $35 per ounce. Remember, the United States holds most of the global reserves after the war, right? Now, this new system was designed to provide stability, which is needed for a world that was basically devastated by war. However, by the 1960s, the United States realized that it did not have enough gold to be able to cover all the dollars in circulation. Problem, right? They tried to save the system, but then in 1971, President Nixon suspended the dollar's convertibility to gold. And by 1973, the Bretton Woods Agreement had collapsed. Abandoning the gold standard made the dollar a floating currency based on supply and demand and backed by the US government's reputation. But the US dollar had another trick up its sleeve. Now, gold might be the OG store of value, but oil literally fuels the world. In 1973, the world was rocked by the Israel-Arab War. Oil exporting Arab nations led by Saudi Arabia had declared an oil embargo on the United States and its allies for supporting Israel in that war, and this made oil prices absolutely skyrocket. Fortunately, the embargo was lifted by March of 1974. The U.S., wishing to prevent a similar occurrence happening in the future, they had to do something. They forgot a little idea. You see, to foster closer friendship between the United States and the Kingdom of Saudi Arabia, the Joint Bilateral Commission on Economic Cooperation was formed. Now, this would essentially let the United States give technical assistance in multiple areas to Saudi Arabia, like science, technology, and most of all, military. And all of this ends up getting funded by petrodollars, or dollars received from selling oil. This cooperation incentivized Saudi Arabia to continue, of course, selling oil using the dollar. Saudi Arabia had already been receiving dollars, of course, for its oil, and the United States aimed to encourage, let's say, them to continue investing this wealth back into the United States markets. Saudi Arabia is one of the biggest holders of U.S. stocks, by the way. So that strategy made Saudi Arabia a major stakeholder in the U.S. economy, meaning it would be less likely to take actions that could harm it in the future, like they did in the 70s. Additionally, Saudi Arabia became a major holder of U.S. debt through its U.S. Treasury securities purchases. Now, combined with U.S. weapons purchased with petrodollars, this agreement actually proved to be mutually beneficial for both of the countries. Now, this is very significant since Saudi Arabia is the leading oil producer under the Organization of petroleum exporting countries, or otherwise known as OPEC, making, of course, one of the most influential players on the global oil markets. Now, this further strengthened the dollar's dominance because Saudi was now demanding dollars for oil. However, the relationship's cracks are starting to show. Settling oil sales in other currencies is now on the table. You see, Saudi Arabia, under the current Crown Prince Mohammed bin Salman, is seen as moving closer to Russia and closer to China, which are traditionally seen as U.S. rival countries. And Saudi Arabia is now even open to settling oil sales in Chinese Yuan and has joined M-Bridge, which is a Chinese-led central bank digital currency project. This is big news, since China, of course, is now Saudi Arabia's biggest oil customer. Now, aside from the sheer trade volume, we have to consider Saudi Arabia's strong influence over other oil exporting countries, especially in the OPEC group. Saudi Arabia is not the only country leaning closer to China. The largest emerging economies formed the BRICS group, which is an acronym for Brazil, Russia, India, China, and South Africa. Now, Brazil and Russia, in case you didn't know, major oil exporters. And it's also invited and admitted other countries like the UAE, Iran, Saudi Arabia, all massive oil and gas producing countries. Though there are contradicting reports saying that Saudi Arabia has not yet accepted the invitation officially. So maybe still some drama there. Maybe they're playing both sides, trying to get a better deal. Who knows? Anyway, the G7 nations combined GDP is $15 trillion, bigger than BRICS right now. However, it's likely that the BRICS nations will surpass the G7 within 2 decades. Now, this is the biggest rival to the US-led G7's group right now. Now, before we go farther into this topic and get into the real juicy stuff, let me interrupt the flow real quick to let you know the best damn newsletter in the cryptocurrency business, and that happens to be my newsletter. It's called the Wealth Mastery Report. Our readers love it. I'm sure you will as well, because every week we're bringing you the latest and best insights on the market, altcoin news, meme coins, deep dives on all kinds of stuff, NFTs, technical analysis, and much, much more. You can join our 135,000 plus weekly readers for free using the link down below in the description on YouTube or the pinned comment over on X. Now, China. See, China has the second largest economy in the world and has vast influence, not just within the BRICS grouping, but really across the entire world. It's used, for example, its Belt and Road Initiative to promote the Chinese yuan internationally as a major currency. The project uses loans denominated in Chinese yuan all over Africa, for example, and encourages countries to use the yuan for repayments and future transactions. The dollar's weakening status, of course, is not just because of the Chinese yuan. We could look at a big part of that as really being of U.S. monetary policy more broadly. You see, the dollar is now being used as a weapon against those who are not towing the line in Washington, right? Russia, for example. President Putin sent tanks into Ukraine, very controversial. I've got a lot of opinions on that, which I'm not going to share here, but the U.S. used economic sanctions to punish Russia and froze $300 billion of their U.S. denominated assets. Putin could not use those dollars anymore for international transactions. The shot heard around the economic world for countries like China. Since global commerce runs on the US dollar, it cannot be looked at as a credibly neutral currency. The sanctions limited how Russia can trade with the world. The Russian ruble plunged 30% within a month. Now, if you're a leader of a sovereign nation, the weaponization of the global reserve currency is not going to sit well with you. For a lot of the world's countries, it didn't. A leader, of course, would then try to look for alternatives in case you make an enemy out of the USA. Or hey, maybe oil's discovered in your country, and then freedom and democracy are going to come and take your oil. Anyway, the question is if the yuan is the answer. A lot of countries think so. Brazil and China are already trading yuan and reals. In 2023, 90% of the trade between China and Russia didn't use the dollar or the euro. Even the UAE has sold liquefied natural gas in exchange for yuan to China. But before you run out and dump your US dollars, let's actually look at the numbers first. Let's get into the real facts here. Now, according to data, the dollar has successfully defended its status as the global reserve currency over the last decade. It registered a 1.4 increase in foreign transaction volume and 13.1% increase in international SWIFT payments since 2012. Hardly feels like it's going out the window, right? The yuan's also gaining ground as a global currency, though, and that is worth talking about. In May of this year, it was the fourth most active currency for global payments, accounting for 4.5% of transactions, which is very, very small compared to the current US dollar status. However, it's a tenth of the dollar's 48% share, okay? Now, in trade and finance, the yuan's share was 5.1% compared with the dollar's 85% share. The numbers aside, this is probably the biggest roadblock, of course, to the yuan's victory, and that is capital controls. Unlike the open US dollar, Russia stuff aside, China's tight control over the yuan and its strength and its weakness. China controls how much money can move in and out of its economy in a very, very tight way. It maintains stability, but it also makes it much less attractive as a global reserve currency. Companies and individuals will be, of course, then more inclined to use a currency with, well, more freedom, right? The United States and the US dollar, yes, they're being challenged right now in a variety of ways, not just Chinese yuan, but potential BRICS currency and all that kind of stuff. It has issues. The economy, the debt, time bomb, all that kind of stuff. We talk about stuff all the time. However, the dollar is not going to go down without a fight. And stable coins, for example, could really extend dollar dominance. But what do we do to protect ourselves from all this craziness? Okay, well, we can imitate the central banks. In January of 2024 alone, they hoarded 39 more tons of gold. Gold will always, of course, be used as a hedge against uncertainties in the world. We can take this as a step up, right? Maybe interesting. Or we can just go the next best asset beyond gold, better, Bitcoin. The digital gold, decentralized, it can never be weaponized, and no country or central bank anywhere can control it, and they can't seize it. It also does not have any issue with capital controls. You can send it to anyone, anywhere, anytime, doesn't matter race, religion, political opinions, any of that kind of stuff. You can use it, you can trade it in any way that you want. It's easy to store, it's easy to transport, much easier compared to gold. Try to move $1 billion in gold somewhere. Good luck, you need to rent a plane for that. Best of all, it has surpassed inflation by miles. Now, it won't come overnight, but the United States and the dollar will lose their influence someday. Every fiat currency goes this way. It happened to the British, it happened to the Romans, happens to the French, and it will happen again and again and again and again to every fiat currency. It remains to be seen if the Chinese yuan will take its place or if some kind of BRICS currency will or whatever. We are certain, though, that we don't want another fiat to take over because it's the trust me bro model, and I don't like that. That's why we have Bitcoin, okay? Thanks for watching.